Hi everyone, want to continue with our capacity building lectures. In our today's discussion, we shall be looking at feasibility studies and report writing. In this today's lecture, we'll be looking at meaning of feasibility studies and reports, the importance of a feasibility report, critical aspects of a feasibility report, and also the major components of a feasibility report. These are things we hope to cover in our study of today. Now let's start. Meaning of a feasibility studies and report. What is a feasibility study and report? Feasibility studies is a study aimed at determining whether a business will be profitable or not. It is part of those planning activities aimed at determining whether a business proposal will be feasible or not. It is usually embarked upon before the commencement of a business project or before embarking on a new venture. According to Ifechukwu 1992, feasibility report is a report aimed at determining whether the business you plan to do will be profitable or not. If the report indicates that the business cannot succeed, then you don't think about embarking on such a business. You should avoid such a business right from the scratch. Because if you go ahead and invest in such a business, the colossal loss that you're going to incur will be so enormous. When a business collapses, a lot of money would have been lost. It would be as if you threw away funds into the ocean. And this can cause heartbreaks or heart attacks for individuals. Therefore, it's very essential that before you incur such losses, you would have taken some proactive measures to avoid the loss. Therefore, preparation of a feasibility report will be able to help you to avoid such losses in your business ventures. It's been said that he who fails to plan, plans to fail. For you to succeed in any business venture, feasibility study and report writing are very important. Oftentimes, banks do ask for a feasibility report of a particular business before granting loan facility for such project or venture. It is on the basis of the feasibility report that the banks will assess to know whether the project or business will be profitable or not, whether it will be able to pay back the loan that are granted through the cash flow that will come from such a business venture, whether the cash inflow or cash generated from such a business venture will be able to pay back such loans. If the business cannot generate enough funds to pay back such loans, there is no way banks will go ahead to grant you such loan facility. Now let's look at the importance of a feasibility report. Number one, it is a tool used to determine whether a business plan will be profitable or not. If a feasibility report indicates that the business will not be profitable, there will be no need to invest in such a business. Such a report will have helped you in preventing a wasteful investment. If the report shows that the business project will not be successful, then there's no point for you to invest in such a business. It would have helped you to save some money that you would have incurred, some losses you would have incurred if you have gone ahead with such a project. Another importance of a feasibility report is that a feasibility report is used when requesting for loan from banks. Hardly will banks grant you any loan facility for any business venture without asking for a feasibility study and report of such a business. It is on the basis of the feasibility report that the banks will evaluate and determine that your business plan should be profitable and be able to pay back such a loan when granted in the future. Therefore, banks, as I said before, they carry out an analysis looking at the cash flows, the cash receipts, comparing with cash outflows, and then determine the net cash flow from such a report to know whether such a business venture will be profitable or not before they can go ahead and grant such loan facility. Another importance of a feasibility report is that feasibility report also serves as a basis of measuring the performance of a new business. If, for example, at the planning level, a feasibility report indicates that a business will make a net profit of $50 million, By the end of the accounting period, the financial statement indicates the business made a net profit of $45 million. Then it means that the business performed below expectation and measures need to be embarked upon to correct deviation from plan. If at the onset from the business feasibility report, it shows that the company will make a net profit of $50 million, but at the end of the accounting period, the actual profit that the business made is $45 million. Then there is a shortfall of $5 million. That's to say, the business performed below expectations, and therefore, measures need to be taken to correct deviation from plans to make sure that the future performance of the organization of the business will be what assured that it will be improved. That's why you need to take all these corrective measures. Now let's look at critical aspects of a feasibility report. Every feasibility report must contain the following. Number one, the size of the market for a product or service. The feasibility report should contain an aspect that indicates what size of the market for that product or service. It is when the product or service is large, when the market of the product or service is large and enduring, that to say it will last for a very long time, then it's an indication that you've been able to identify opportunity which you need to exploit. But if the size of the market is small and it's not going to last for a while, if it's going to last temporarily, then it's an indication that you are not going to make much profit from such a business, and therefore there is no need for you to embark on such a project. Another aspect of a feasibility report is the management team for the business. When we're talking about the management team, who are those that will manage the business? What are their educational qualifications? What are their experiences? All this should be indicated in the business feasibility report. You need management team to run the affairs of the organization on a day-to-day basis. Such a report will indicate whether you'll be able to have enough management team to manage your business. But if from the feasibility report you don't have enough management team, then you have to look for who will manage your business right from the scratch before you now commence managing or starting such a business. Another aspect of a feasibility report is the financial requirement of the business. This is very important to guide you whether to go on with the business or not. If the feasibility report shows that financial resources are insufficient, you may either borrow money from friends, from relatives, or even from banks to fund your business project. Or you may decide to abandon that particular business from the scratch because of what? Lack of funds. It's just like what the Bible says, that you cannot start building a house without thinking firstly whether you have enough funds to finance such a building project. If you don't have enough funds and you start the project, then you may be stuck along the way, and people will start laughing at you that this person started a building but could not complete it. Therefore, before you embark on a particular business venture, you must carry out an assessment to know whether you have enough funds to finance such business. If you don't have enough funds, then it's better for you to abandon such a project right from the scratch. Another critical aspect of a feasibility report is a marketing plan for your business, which include the 4 P's of marketing. And the 4 P's of marketing include your pricing strategy, the product strategy, promotion strategy, and place, or what referred to as distribution strategy. That's the distribution channels that you intend using to sell your products and services. Another critical aspect of a feasibility report is the determination of the business profitability. With the help of ratios and other analytical tools, you can determine if the proposed business will be profitable or not. If it is found that the proposed business will not be profitable at the onset, then there may be need for you to leave the business at the onset, or you look for how you can fund such a business. You don't just start a particular business project without having enough money. If you start, remember that such business, such investment, it requires huge capital outlay, and they are irreversible projects. The capital outlay are usually so enormous And once you have commenced investment in such a project, the funds cannot be reversed. You cannot withdraw such funds. That's why we say they are irreversible projects, and therefore you have to be cautious. Before you can embark on such project, you have to think about it. You don't need to start a particular project without knowing whether you have enough money to finance such a project, or whether the project will be able to pay back enough on what capital outlay you have invested in it. So these are the critical aspects of a feasibility report. Now let's look at major components of a feasibility report. Every feasibility report must contain the following: the products. When we're talking about the products you intend to sell to the consumers, or if it's a service, the type of service you want to provide to your customers. Then we also talk about the next thing is the market of the products. You must have enough information, enough data about the size of the market that you want to serve. As I said before, you must have enough market before you start embarking on such a business. If the market is not enough, then that means the business will not last for long. And therefore, there is no need for you to venture into such a business. Another component of a feasibility report is the management team. The management team are those that will manage the business on a day-to-day basis. You must be able to know whether you have enough management team or not, because you need qualified management team to run the business for you. Another major content of a feasibility report is the production process and your production plans. You must have put in place the production plans you want to use to produce your products and the services. Another component of your business feasibility report is the marketing plan, and also the manpower requirements. What are the manpower requirements that you need to operate your business? Both the employees, those who engage in the production of the products and services, and other labor that you may need for your product and the services. You also need information about estimated capital expenditure, and also estimated working capital, and also cash budget. You also need information about projected income statement. Now let's look at this in more detail. The first one is the products. Under here, you give a brief description of the nature of the product or service you are to offer to the customer for sale. What is the nature of the product or service? Is it a beverage, a soft drink, or detergent that you want to manufacture? You should give a clear description of what your product or service is all about. The next component is the market. Under this section, you give a description of the nature and size of the market for the product or service you want to offer for sale. You must indicate how you did a market study. You should also indicate the size of your market share. Are you going to be industry leader or a follower? You should carry out a sales forecast of your intended market share. This forecasting of the market share is very important because it will give you an indication of your key marketing strategy that you're going to use. For instance, in determination of your production planning and control decisions, plant and equipment requirements, raw materials and manpower needs, as well as your advertising and cash flow needs. Without you having enough sales for your products or services, there is no need for you to be in business. To be able to estimate your market properly well, you need information about the following. 1. The number of competitors in your proposed industry. How many competitors do you have in the industry? Who are they? What are their potentials and sizes? Who are the industry leaders? What are their sizes and scope of operation? 2. What part or proportion of the market will be left for you after the competitors have taken their own market share? You have to give an indication on this. That means you have to carry out what referred to as competitor analysis. With competitor analysis, we're able to determine the size of the market that are being occupied by your competitors and what market share will be left for you. According to Ifechukwu, you can estimate your market by estimating the number of families, products or services in a given geographical area where you want to sell your products and services and multiply it by their estimated annual expenditure on this your kind of product or service. With such information, you'll be able to know the market share and also the estimated market size of your product or services. Knowing your competitors is very simple. You can consult a trade journal or magazine that features your industry. You can also consider local directories for relevant information about who your competitors are, or you can also ask your banks for such information. You can also visit your local chamber of commerce and other trade associations for information relating to your competitors. Another content or aspect of a feasibility report is management team. In a feasibility report, there is also the need to state the management team. The management team are the men and the women that will oversee the daily functioning and operation of your business. There is need to give a brief description of the names, educational qualifications, and experiences of the individuals that will be charged with the responsibilities of overseeing how the business is being managed. To obtain finance for your business proposal, the financiers will evaluate the knowledge and the effectiveness of your management team before granting such financial assistance. Therefore, you need to state who are going to be your management team, what are their experiences, what are their educational qualifications. With all this, you can now go ahead and know whom they are and whether you'll be able to succeed or not. Another aspect of your feasibility report is production processes and production plans. This is another important item that must appear on a feasibility report. In this section, you provide a detailed description of the processes you are going to follow to manufacture the products that you intend to sell to the consumers. If your proposed business is a manufacturing enterprise, you provide in this section clearly the stage-by-stage processes the raw materials will go through before they become final products. It may be needful to include such information like the location of the production facilities, the various materials and labor that may be required to produce those products and services, and also the production costs. Provisions must also be made for production budget. This is a proposed estimate of the quantities of goods you will produce, the raw materials to be used, and their cost implications, the type of labor required in the products for those products and services, the number of hours to be worked and their associated costs. Remember that the quantity of products to be produced depend on the sales forecast, the production capacity of the production facilities, and also the availability of raw materials. You may prepare what is referred to as a material cost budget. Under this, you are to state the standard material cost, which shows the quantity of materials, that is standard quantity, to be used to produce the products and services, and also a unit of finished products and services to be produced. So you have to prepare what referred to as a cost budget, material cost budget, which show you the number of products to be produced, what materials that you need to produce them, as well as the labor you need to produce those products and services. formula for standard material cost is given as standard quantity times standard price. Thus, material cost budget is obtained by multiplying the standard material cost per unit by the number of units to be produced. That will give you an indication of what referred to as the standard material cost. There is also the need to set a labor budget. A standard labor cost can be developed by considering labor time and wage rates. You should estimate the number of labor hours to be spent on producing a unit of your product and rates at which such product will be manufactured. The formula for calculating standard labor cost is as follows. Standard labor cost is equal to standard hours times standard rate of pay. To be able to calculate the standard labor cost, you need to pay attention to the various stages of operation or production processes, the time taken to produce those products, and the type of labor required to produce them. Another item of cost you need to estimate is the production of factory overhead costs. Factory overheads